What's up, everyone? Week after week, we've been talking about the changing housing market. So I'm sure by now, the only question isn't how high will interest rates go or how low will prices get, but when will it all end? By this, I mean, is there an end in sight when the housing market will be balanced and manipulation of the federal government will end? Today, we're going to take a look at an article by Lance Lambert of Fortune magazine that's titled, "When to Expect the Housing Market Downturn to Conclude, According to Wells Fargo." Let's see what they have to say, and then we'll also take a look at some of the regional housing markets on how bad it's gotten and what to expect. So let's dive right in. Lambert starts the article by stating that historically speaking, most U.S. recessions arrive after a period of rate tightening by the Federal Reserve. If the Fed raises rates to fight inflation, the economy will then react by slowing down. Of course, Fed-induced recessions usually start in the housing market. Well, this is definitely true right now. As soon as the Fed Reserve started raising rates, banks responded by raising interest rates. Buyers got pushed out of the housing market due to affordability issues. Sellers started reducing their prices. Builders responded to low buyer demand, and the market started its downward spiral. So when will it end? Fortune reviewed the latest housing market outlook published by Wells Fargo to see what they were saying. Wells Fargo projects sharp declines in new home sales down 10.5%, existing home sales down 7.4%, single-family housing starts, meaning the beginning of new construction, down 7.3%, and the housing GDP down 10.1%. GDP is the gross domestic product, or in this case, the U.S. housing activity. To give context, in 2020, the so-called housing GDP soared 12.8%. Then in 2021, it spiked another 9.9%. Lambert continues by saying that in 2023, Wells Fargo expects the housing downturn to intensify even further. Next year, the bank forecasts another drop in new home sales by 6.5%, existing home sales 13.1%, single-family housing starts 12%, and the housing GDP 16%. The leading driver behind the housing downturn is clearly the rising mortgage rates. I've actually seen rates in the mid-sevens this week, and depending on your personal situation, could even be in the 8s. As far as home prices, Wells Fargo predicts that the national home prices will go down 5.5% next year, but it will vary significantly depending on the markets. Markets where home prices shot the highest are now vulnerable to a disproportionate swing to the downside, notably in previously white-hot markets in the Mountain West, which saw an influx of remote workers at the onset of the pandemic. Home prices in desirable locations with comparatively tighter supply are likely to hold up much better, writes Wells Fargo researchers. So it is interesting to see in this statement that they are saying that some areas won't be as affected if there are more desirable locations with tighter supply. But regardless, among the country's largest 896 housing markets, 121 of them saw home price declines between May and September. The markets that are getting hit the hardest by home price correction fall into two groups. The first group is the overvalued markets, like Austin, which is down 8.23%, Boise down 6.35%, Colorado Springs down 4.13%, and Phoenix down 6.6%. The second group is made up of high-cost tech hubs like San Francisco, down 7.88%, San Jose down 10.59%, and Seattle down 3.93%. Take a look at this chart provided by Fortune, which shows 19 housing markets with more than a 5% home price decline. I'm not going to read all 19, but let's just take a look at the top 5 in order of the greatest home price decline moving down. If you want to see all 19, I'll put a link to the chart in the comments. San Jose, California, 10.5%. 7.59%. Austin, Texas, 8.23%. San Francisco, California, 7.88%. Santa Cruz, California, 7.51%. And Boulder, Colorado, 7.46%. Do any of you guys live in any of these places? If so, what are you seeing? Definitely comment below. And as much as everybody is reporting on the decline of home prices, we tend to forget just how high prices went up over the last 2 years. Fortune also shared this map showing the shift in values from March 2020 to September of 2022, as measured by the Zillow Home Value Index. Just to take Austin as an example, values rose 60.93% in 2 years, according to this map. So even if home prices in Austin fell 8.23% in the last few months, they're still incredibly high compared to 2019. So back to the original question, when will the downturn end? Well, according to the Fortune article, Wells Fargo predicts this ongoing housing downturn will fizzle out heading into 2024. In fact, Wells Fargo predicts that in 2024, the housing GDP will rise 5.1%, while US home prices rebound by 3.1%. Their theory behind this is that mortgage rates may end up falling slightly, which will then increase sales activity, which will then reignite home price appreciation heading into 2024. So what do you guys think? Could the downturn end in a year? And how low do you think prices will go before it starts to turn around? Here in the DC area, I'm still seeing multiple offers on some houses, while other houses are still staying on the market longer and have price reductions. Just yesterday, I went to an open house and it was jam-packed with people. This house was listed in Potomac for $1.5 million and will definitely be getting multiple offers. I'm telling you, this open house was packed, filled with buyers. So I'm curious, are you guys seeing that in your area? Are you going to open houses even if you're not in the market? Because I'm asking you, please do this. Go to an open house and let us know what you're seeing. Is buyer activity still active, or the open house is pretty slow? Because honestly, I have to tell you, I was really surprised by how busy it was. The one thing that is clear to me is that transactions are way down because people simply don't know what they want to do. Should they buy and sell now or just wait it out? Would-be sellers don't want to give up their low interest rates and trade them in for higher ones. Many of them have refinanced over the last few years, and I get it, it makes sense. But without more sellers, we just simply don't have enough inventory. My philosophy is that a house is more than a transaction. It's your home. It's where you make memories and build equity. It's where I'm happiest with my family and my friends. So as long as you're planning on staying for at least 5 years, securing a home for you and your family is investing in your future, both fiscally and emotionally. But let me know your thoughts. What are you seeing where you live? Is there more inventory? Are prices going down? Or are you still seeing multiple offers? Definitely comment below. It's just the best way we can really gauge what's happening in the real estate market. And like I said, do me a favor and go to an open house in your neighborhood and report back and let us know what you see, because that gives us a really great idea of buyer activity. I hope you got some value out of today's video. It's a lot of work, but I do think it's really important to bring you the most current information so you can make the best decisions for you and your family. If you did get some value and you want to show our channel some support, definitely smash that like button, comment below, and subscribe to our channel. It really does motivate us to make more videos. Thanks for watching. I do appreciate it. Bye!